non-farm payroll numbers, which are expected to come in at 196,000. What we would do here is we would probably add 70 and subtract 70. So we're looking at, let's say, on the positive side, 266, and on the negative side, we'd look at 126. Based on history, we know that if we get a deviation going this direction, the market normally responds with a certain amount of consistency to that deviation. And what we would probably see is, in this case, dollar strength. So this would be a positive for the USD. Okay? If it went this way, this would be a negative for the USD. The spreads, you'll see how they go into 15 plus. Sometimes you might even see a blur of 90, 100 point spreads. This is why you really can't trade during these conditions. Wait for things to settle. You can see already the market jumping around, the yen's doing their thing. There goes the spreads. Again, the numbers haven't come out yet. The market's already anticipating a better number, and that's why, and now you can see they're all over the place. Look at the, look at the yens. 74,000, guys. 74,000. That is, wow. Look at the spreads. You can't touch this. Notice how the spreads still are at 15. These are the market makers. They've been caught by surprise, and they do not want to trade. They are not providing. They're really scrambling, and there is no business at least being done. And if there is business being done, it's extreme business, industrial business. And it's definitely, as a retail trader, you do not want to be in this market trying to do business right now. Okay, euro dollar. Let's see. Euro dollar. You're down at 12. Let's see what happens here. That's how you do it. You got in at euro dollar, you should collect. You should collect. You saw it. It came back to around 10 or 12. That was your chance to get in on euro dollar. Collect, get out, make your points. You're done. So once more, what did I do? I waited for a retracement. Got in it. Here's euro yen retracing. Let's see if it uses 30 euro yen, but there it goes. Here we go. Come on. I'm going to tighten the stop. There it is. It's a 5-point stop on it. And I got taken out, so be it. But euro dollar is pushing really hard. That's why euro yen is doing this. But euro dollar is pushing really hard. If you see euro dollar up at 68, don't jump in it right away. Let it see, let it react a little bit. Here's your euro yen trade. Come on, get down. There we go. Collect some points. Tighten your stop. And so be it. Bear with me for a moment. Aussie dollar, because it is hitting a strong area. Let's go ahead and put a 3-point stop on it. It's a little bit too tight, but yeah, you can utilize all this. I mean, there's massive amount of support, a wall right there, and that's exactly what it did. It went to that level and then boop, took off. If you notice, whenever, like right now, if I get in this euro dollar trade here, and I set a protect, we do have it set to a 20 and 10. So again, you risk 10 and you hopefully make 20, but we don't always allow this to work itself out. But we always want to make sure immediately, as soon as we're in, we know that the worst case scenario, if this thing moves too quickly, is that we're going to lose 10 points. We don't want to lose 10 points. If I felt comfortable this was the area that I wanted to execute my trade, I really don't want to lose more than 5 points. So at this point in time, I'll come back here and I'll adjust it, and I'll move it so that I'm now at a 35. So I'm actually at about a 4-point stop loss. And as the trade continues to work into positive territory, I'll continue to adjust that stop and move it to where eventually I'm at break even, or I'm already locking in some profit, and then immediately I'm also looking to collect if I have the target points that I'm looking to collect on. If you haven't made enough points already this morning, and now is the time you're going to get into trading, that's what you should be looking for.